Good morning, everybody. Welcome to the show. Welcome to September. But most of all, welcome back, Angeline.
Oh, it's good to be back, Rich. It's been fantastic. Good time off, but I really miss you guys. And during the trip in Dorset, I was looking at all these fantastic pictures of our studio that's just getting its finishing touches now.
That's right.
Whereabouts are we at it, Rich? Give our viewers a sort of teaser.
Well, that's right. So, people, we are sorry, but we are from home, as you might have guessed today. This isn't the new studio. So we've got one last morning's work, and then Ange and I have to go in around midday today and do all the testing for the new studio, which means we will be live from there tomorrow morning, which we're both very excited about because we have seen some behind the scenes pictures, haven't we?
Yeah. It's rocking, I have to say. Well done to the team for getting so much done in such a short period of time.
Right. More importantly, belated happy birthday wishes.
Thank you so much. It really touched my heart, Rich, because I had all these messages streamed through after you announced it on air. Yes, 31 again. Wonderful age to be, I have to say. So it was wonderful. I spent it down in Dorset.
Mm-hmm. And what did you get up to down there?
So the weather was incredible. I have to say this country is hard to beat when the weather is so gorgeous. A lot of water sports, a lot of paddle boarding, swimming in the sea. And I also, for those of you that have been on this journey, Maturin, Andrew McKilvey, Monkey Man, Steve as well, and Gavin Ackers, I did come back with something extra.
Ooh, is it a big purchase?
It's quite a big purchase.
Really? Okay, well,
after a lot of stress testing of
either you've bought a holiday home down there, which I'm sure you don't need another one, so it won't be that. You were talking to me about a new pair of Nikes, but it sounds like it's bigger than that.
I did actually. I still need your advice on that because I've been looking at Adidas as well. But yes, it's not that. It's not that.
Go on.
So maybe our viewers want to guess whether I have purchased something much larger. Whether they want to guess the object or actually what brand, what mark. There you go. There's a hint. What mark it is. So yeah, it was a large purchase.
Does it have four wheels?
It does have four wheels. It does have four wheels.
Wow, this is very exciting, right?
Yeah, it is. It is very exciting. I'm still not used to the buttons and everything. A lot of buttons.
Back in the day, it used to be that August was the new registrations, wouldn't it? So you get a brand new car as early in August as possible, but I'm not sure if that still even happens. No,
I mean, no. Terence and Cam are guessing in the gallery as well. No, it's not an Aston. It's not one of those crazy ones. I mean, it's just too expensive. I found a good deal because I realized that if you go further out of London, lots of cars that actually get resold less than a year old, and they've already had all that premium taken off. So I went for do we have a drum roll?
No, hang on.
Or is this a poll?
Maturin's gone for Mercedes. Andrew McKelvey and Boise have said a BYD.
Oh, I did go to a BYD. Well, guess, but I did go for I did go and test out the BYD. I didn't buy it.
Oh, so it's an electric.
It's unexpected. The price, everything kind of like came together, and it was unexpected. So has anyone guessed? Anyone? Terence, you want to guess?
Trading Days says a Porsche. Theo Van Bartold says a Mercedes.
Oh, close. I was testing the GLE. Any others? No one's got it right yet.
What's Pete Ward got?
Pete Ward's got an EV9.
Okay, I'll go for that.
It's a Polestar 3, people.
Wow, right, we need a picture. Come on. Oh, Maturin got it. He just said not the Polestar 3 question mark. Come on, we need a picture up.
I'm going to try and get
Right,
a picture.
you have a look at that, and I will announce what is coming up on today's show. So you got Angeline and I through to the opening bell. Then Ronnie comes to join me for a bit of fast markets. And I guess we're fitting in live from the trading desk at the same time there, really. Let's see, is Ronnie going to be in the office, or is he going to be in his girlfriend's apartment again? And then we've got an expert edge with Angeline and Han ETF at 8:35. Then 9 a.m. we bring you the all sessions opening bell, and then Chris Beecham is doing trade of the week and technically speaking today. Is Axel on a long weekend, Ange?
I think he is on a long weekend because he's off today as well.
Nice.
But well deserved. He's had, he's been working very hard. And today, I guess as well, it's Labor Day, isn't it? Am I right in saying that? Of course,
it's US Labor Day. Oh well, so we're doing all sessions on US Labor Day. Oh, easy to see. Producer Phil was away.
Yeah. Yeah. I did think about Labor Day and kind of like, So it's going to be interesting as well. I think a lot of people this side of the pond will be on holiday too because it's quieter, isn't it? Usually.
Well, yeah. I mean, US Labor Day. So what we used to do in Credit Suisse was that most trading desks, we were set out by sectors. So our sector was mining, steel, and automobiles. And there was 3 of us on there, and industrials as well. 3 of us on there, myself, Heathy, and Bolly, and we would play spoof to see who would get to go home early on any US bank holiday. So generally, you would work through till about 10:30, and then you would one of you would get to go home. And normally, what would happen is that I would win the spoof, and then Heath, who was the boss of the desk, would give me 100 quid if he could go home instead. So he would bribe me to stay and do the work, which was great because it was a quiet day anyway. And at that age, you're kind of loving being on the trading floor.
Yeah. So let's have some overnight action. Do you want to quickly look at the picture that I've got on?
The Polestar, yeah.
Welcome back. And for those of you that guessed which car Ange went for, here we are. Here's the sneak preview. Here's the hack as well, because
beautiful.
We give you added knowledge here, Rich and I, on the markets, but also when it comes to other things like this. So less than a year old, and it was one of those cars, we think anyway, because we did some investigation, that was driven by the actual a company to kind of showcase its capabilities. Therefore, it had very little mileage on it, but it had some 30% hoiked off its price. So there was a race
the bargain
to the end.
Hunter.
Hoiked up its price. So it was a very fine line. I have to say, the GLE Maturin, I agree with you, very fine car there. But all the tech within this car, and now I get to try out. Never had a Volvo Gilet ever in my life. There's a lot of functions in there.
Fantastic. Right. Well, clearly, and celebrating the move in gold, because my goodness, people, we are getting this march higher. We've been talking about it for 2 weeks, and now it's really starting to gain momentum. The more that Trump messes with the Fed, the better it is for gold.
And take a
look at that. Take us through some of the technicals on that chart, Ange.
So as you can see here, it's come out of this channel sideways trend that we've seen for ages. In fact, I got so frustrated with it that I did, a wonderful thing, this hindsight thing, I did over my holiday come out of the responsibly mined mint ETF. Unfortunately, it's now started moving a lot higher there. You can see from a technical viewpoint, I've circled that you want to see lots of nice green bars there heading up. and we are approaching that 3,500 level. Bear in mind as well that the price is above key moving averages. I've drawn them out here for you so you can see it clearly. So it's above the 50-day, above the 20, and above the 100. It is also above what I like to see is above the 200 as well, indicating a strong uptrend, right? So you like to see it when it's above all those moving averages there. In terms of volume as well, nice volume, which held steady. We saw that upward tick there. This does reinforce that upward trend, which clearly currently still signals a buy trend is underway. Rich, I take it you're going to act on this later after the show?
Well, I'm already loaded up on gold because that's really.
You had the miners, didn't you?
Yeah, I don't have those. So that's the one that I'm interested in going for, the junior miners. However, after the podcast on Thursday, people talking more about silver. And
yes.
I noticed that Julian's mentioned it on the chat as well. So yeah, right, that's the junior gold miners. How does that look if we go back to its previous all-time high? Is that it?
Let's go
yes,
weekly.
look at that.
There we are. So yeah, it's now at levels last seen January 2013. So very, yeah. And if we get past that level of interest, then the next point of interest will be around that, 87, 70 mark.
Okay, so about 9% higher. And then, yeah, take us on to onto silver.
Hi-ho silver?
Yeah.
I hear you say. Here we are. This is silver. This is a weekly chart for you, trader friends. And let's go on to the weekly as well, just so that I can pan out. You can see did this happen when I was on holiday? It went past the 40 level.
Yeah, it must have done. Yeah, it looks like it's had a weekly breakout.
I must have known I was away. Yeah, there you go. So yeah, it's really interesting there in terms of technicals. We're seeing oscillators also showing neutral signs, so be a bit careful there, but it has broken out nicely, which means the next point of interest will be around the 22nd of August. Let's go to the daily view as well, just to make sure that we haven't missed anything. No, we haven't. So there's a lot of buying recently, which suggests that we are seeing a lot of interest in this after gold moved higher. Don't forget, silver tends to lag gold slightly, and also it is a lot more volatile. So if you are trading silver, make sure you have your gloves on, bearing in mind what I just said about the oscillators, giving us some cautious readings. But it is interesting that at the moment we are seeing this march higher, 3 green candles there. Be careful with silver, Rich, and all of you if you're diving in, because I have said this to Scotty Byrne before. Silver's one of those that does pay attention to the 3 black crows. So you tend to see, can you see you've got 3 up days and then a correction? That might happen again there. It tends to like to do it.
This is on the weekly as well. So
yeah, this is on the weekly, but having a look at the daily, we tend to have that as well. And it's 3 or 4. It tends to almost have a brief, correction, just ever so slightly. So just be careful when you are trading spot silver.
Okay, wonderful. Right, so that's gold and silver moving. The dollar is weakening, but why? Well, the front of the FT will tell us, of course, because we see this continued aggression from Trump to take over the Federal Reserve, and a lot of press at the weekend about it. So Angeline's just going to get up the FT
there we are.
And we're going to have a look at the lead story, which is
I was going to message you, Rich, during my holiday, whether or not Powell has also gone on an early holiday, but it seems like he's still there.
So Powell's not the problem anymore, Ange. He's Trump's found a very clever way around it, and that is to sack Lisa Cook. So the name of our podcast, The Art of Investing, was "The Fed is Cooked. Long live the Fed." There we go. There's an economist at University of Notre Dame saying the Fed will become a puppet of the government. And this is exactly what Trump wants, of course. He will have a 4-3 majority of Fed voters that he has nominated for their roles. And that majority will allow those 7 to then put into place the 12 local governors of the Fed. And that comes in February. So by February, Trump will have full control over the voting of the Federal Reserve, which means that we get interest rates aggressively lower towards 3%, towards maybe even 2.5%. And that is why gold is rallying, and rightly so. If that is what happens, then the dollar will have a real sell-off. And it really calls into question what the long end of the yield curve will do as well. Will there be a panic over the potential inflation that comes in 2026 and 2027?
This is the interesting thing, isn't it? We've been talking about this, Rich, with Scotty and Bill Blaine and also Joachim, that really the outcome of the Fed, whichever way you want to cut it, is that it loses its ability to just be completely neutral,
Independent,
and also independent. That's right. And no matter which way you cut it, all this means is weaker dollar, and a weaker dollar, of course, is supportive of gold. What's interesting, as well, is that more than a quarter of economists in this article that's been reported on the FT. Take a look at it. It's a really, really good article. More than a quarter of economists fear that by the end of Trump's term in 2029, the Fed will be unable to fulfill its mandate to set US borrowing costs free from political influence. Although 45%...
I think they need to update that by the end of this term, or like by the end of this year.
This year. And also, it seems like they've been listening to our show, because they're using a line that producer Phil always uses. Time will tell. Or yes, too early to tell. 45% think it's too early to tell in what shape the central bank will be by then. I think you're totally right. By the they need to update that by the end of this month, even maybe. But it's a really interesting time. It's a paradigm shift for the Fed.
Good, right. We've got some upgrades and downgrades for you. So British Telecom and Citi really do not like BT. They are reiterating their sell call, but they're doing so with a slightly higher price target, only £1.40. So that's significant. It's over £2, isn't it? So Citi really trying to put the boot into BT there. They have been wrong so far. Segro has been cut to equal weight at Morgan Stanley. That's with a £7.50 price target. United Utilities has appointed a new independent non-exec director. And the COO of WPP is about to retire at the end of this year. So the clear out at WPP continues.
Just some of the big headlines that might move markets or move the stock later on. We've got BAE Systems. The MP of Norway picks the UK to supply Navy frigates in a $10 billion deal. So our SACs, if you're listening to that, it's also coming up. Now I'm looking at my watch for the date coming up this 8th and 9th, the DSEI in Excel, which is very, very soon. Domino's Pizza has launched a £20 million share buyback program. Rich, you're still forever in my mind as the first person to ever let me try a piece of Domino's Pizza.
When we had it for the video, yeah.
might be the last, I have to say. Yes, so they've got a share buyback program there, UK North Sea oil and gas will disappear within years, not decades, without Labour tax reforms, warns trade body Offshore Energy UK. So just some of the headlines that are crossing the ticker this morning.
There's just one more actually that we should mention, because Graham Dixon brought this stock into our universe on Friday. Chill Brands. So Chill Dude.
Chill Dude. Take a chill pill.
Started to really move on Friday afternoon, and they have been appointed by appointed their UK partner by RELX. So Chill Brands. Let's see, we're on the daily there. Can we just go on to the hourly, perhaps?
Here we are, hourly. There we go.
Let's see, they started to move. As soon as he mentioned them on the show, you can see, is that about 10%?
That is.
Are they up 10% from Friday morning?
Let's have a look. Friday, 10 a.m. then 9. So 1638 to 2.1.
Graham Dixon moving Chill Brands on Trade Live with IG on Friday morning, up 20%, and you see them expected up another 5% this morning on the back of that deal. Also, the other stock, Pensana, that he was speaking about, also had a good day, so that moved 7% on Friday as well.
Yeah,
and you saw that up to £1.06. So that was 99 pence when I bought it on Friday when he was talking about it. So a nice move there by Pensana Rare Earths as well.
Wow, you've had a good week. MongoDB as well, Rich.
It's got to be the funniest trade that I've ever been part of, I think. Couldn't have told you what they do before
Julian Wheeler.
Before Julian started talking about them, yeah. There is Mongo. And I tell you what, I was very lucky in the end as well. Very good advice from our viewers, because we did a poll on what I should do with the position on Thursday morning, Ange. And the viewers, I think it was 69% of them said, don't try and do anything fancy. Just take the money, take the profit, and run. So I did that at about 5 p.m. on Wednesday evening. It was, because it was just before Coldplay. And it's perfect because they got up to 315 in the end. I took the profit at 290.
Wow.
And it actually would have meant that all my profit was wiped out, because the break even was 315. I would have ended up losing money on the option structure because they went so high. So thank you all.
Oh, that was very well timed, Rich. Take a look at that. So if you came out at around 290. I was.
No, that's at the weekly chart there, Ange.
Oh, sorry. Here we are. Daily. And go to the hourly chart there.
Yeah, so you can see about 5 p.m. on Wednesday. So that first move up.
Here we are. That's around 5. That's 5 p.m. on the dot, according to this. Very nice indeed. Yeah.
So because they had gone so high, every tick they went higher from there was a loss of probably about $50. And yeah, you can see they were absolutely gangbusters. So what a call from Julian Wheeler.
Nice. He's very excited. I sent him a snapshot of your options trade.
Yeah, right. I opened a bottle of whiskey.
It's a huge week as well coming up, because I'm so excited to be back this week, because we have loads of, I thought I'd missed all the excitement, but actually today and also in the coming week, we still have quite a few big names, haven't we, out with earnings?
That's right. And some economics as well. Shall we have a look at the economic calendar quickly before we go to chart of the day? There it is, right? So we've got EU inflation tomorrow morning. We've got those jolts. So, of course, now the jobs market is very front and center with regards to that, well, how many rate cuts we're going to get for the rest of the year. So you've got the jolts coming out 3 o'clock Wednesday. That's the first big one. ISM services at Thursday, 3 o'clock. Non-farm payrolls this Friday. We're already on the payrolls week. But one thing that Producer Phil has forgotten to put in there before he goes away on holiday today is, in fact, he'll be on the aeroplane as we speak. The ISM manufacturing should be out today at 3 p.m. So just watch for that. That's the big one. Is it today or is it tomorrow? It is tomorrow. So that ISM manufacturing comes out at 3 o'clock tomorrow.
Well, we've also got tons of earnings. So Wednesday, we've got Salesforce, Hewlett Packard, this is HPE, Dollar Tree and Macy's as well. And then on Thursday, we've got Broadcom, Issas, Lululemon Athletica is also out, or rather my Lululemon Athletica, he's bet on Nike, doing better next 12 months, 11 months now, and DocuSign as well. So it's not a quiet week indeed, although it is a shortened week for our US friends.
Right, it's time for Guess the Charts. That's right.
Let's see who gets it first.
Yeah, let's everybody take your marks. And what country are we in today?
We are in the United States, and it's hopefully a chart that most people will know because it's quite fun. I hope Monkey Man's not here.
Well, luckily, Steve Davies and Away from the Numbers have just arrived in time. They're coming in especially for chart of the day. So let's go. 3, 2, 1, go.
But he's guessing just like the rest of this place. Guess the chart, do you feel the beat? Could be finance, could be something sweet. Is it punk, is it dumb, is it dressed in gold? Only time will tell if the move is bold. Guess the chart, got me in a trance. It's a sideways flirt and a risky dance. Could be banks, could be tech, could be clean, new start. You don't know love till you guess the chart. I've been playing with my moving lines, drawing trends like zodiac signs. MACD's talking RSI too, but none of it tells me what you're gonna do. Break out, fake out, up and stall. Is it real or just protocol? No crystal ball, just guts and grace. And this candle looking me in the face. Guess the chart, yeah, make your call. One wrong read and you lose it all. Could be oil, could be steel, could be crypto art. You're never too safe when you guess the chart. Guess the chart. The tempo climbs. I've been fooled too many times, but I'm still here, heels on the floor. Guessing charts like never before. Guess the chart and feel that high. One last guess before we say goodbye. It's a game, it's a flame, it's a neon heart.
Hey! Hey, we are back and we have a winner. Rich, talk us through the some of the guesses first. Oh, actually, we've got Steve saying Boeing. Yes, Derek got it.
Good job, Idarock. That was quick as well. Clearly, he is he's been trading a bit of Broadcom. Right, here we are, opening bell. UK London Stock Exchange is opening for business on the 1st day of September. Let's go.
So it's looking slightly higher there, but it has to be said it's a pretty quiet day out there when the
what are
US
the
is
stocks
not.
doing? Get into the stocks.
Let's
Come
go
on.
into the list. Here we are. And there we are. There are the winners. We got Anglo-American. Oh, switching sides now. Anglos. Fresnillo is up 2% there. BAE Systems up 1 3/4. We've also seen Barclays higher there. JD Sports up more than 1%. AstraZeneca also making some gains there. Rich,
Right,
want to
something
take us?
interesting just in the mining space. So iron ore is down 3% and copper is up. So you're going to see big differentiation between the likes of Rio Tinto, right? Rio's is down 1.1%, whereas Glencore doesn't have any iron ore, so that should be small higher. But then, of course, because these algos only trade the baskets, then sometimes you can get a trading opportunity. So I'm trying to see where Anglos has got iron ore, so that should be down. That's right.
Yeah, there we are.
But Antofagasta is lower by 14 basis points. It's got a 5p spread, though, so I wouldn't trade that just yet.
Glencore, here we are.
There's no reason for Antofagasta to be down on the day other than people selling the mining basket because Rios and BHP are lower.
Here we go. Antofagasta down slightly there. Let's have a look at some of the others there. We've
And
also
Glencore,
got...
yeah, Glencore down on the day is wrong, so I'm going to buy some of those. 5,000 at 291.30.
Yeah, we got the banks elsewhere up as well. 1.25% for NatWest. GlaxoSmithKline following AstraZeneca's lead. We've also got Intercontinental Hotels Group up 0.6%.
Why are the defense names up so strong, Ange?
I think it's just digestion, right? We saw them beaten down the week before I was off. And then they came back up after there was no clear sign of anything concrete coming out from Putin and Trump and Zelensky as well. And so now we just have what we call this consolidation phase, people coming together in the defense space as well. I spoke
do you want to just check your upgrades, downgrades screen, see if there's anything? Because Tesco's been up 2%. It's a bit weird as well. BAE System is very understand why that one's now up 3. Haven't seen anything there this morning, so there's clearly a story that we're not seeing.
The BAE System story is this morning we had I think I read it out earlier on. BAE Systems because the Norway picked the UK to supply Navy frigates in a £10 billion deal. So that's BAE Systems.
Right.
In terms of the
that's exactly why it's up then.
In terms of the other defensives, I've been speaking to quite a few people in Kinetic and some people in the MOD as well. And there is this consolidation phase now where there is an understanding that the spending that is required until 2030 will still need to be done. And so until anything concrete comes out with, from Ukraine or from Gaza or certainly, from Trump, it's kind of keep calm and carry on.
Right, we got a little bit of relief in Lloyd's. Lloyd's back above the 80 pence level. Barclays joining it up 1% on the day. And what about on the loser side? What have we got much weakness in any of the names today? It is WH Smith. That's new lows, isn't it?
Wow. Andrew McKilvey likes trading WH Smith. Did really well when it came the bounce back.
WH Smith, that's really worrying. I would have, if somebody had to get out, I would have expected them to work the order over the whole week, i.e. they would have finished on Friday. But the fact that it's getting clubbed again this morning is really, that's a bit painful. Now, away from the numbers saying chill brands, Am I thinking the wrong stock here? Chill Brands up another 20%.
Wow. Let's have a look.
Oh my goodness, this thing.
Keeps giving. Look at that.
What? Oh, I
Wow.
mean, look, it's a huge spread there. So let's let that calm down a little bit first. But it looks like Graham Dixon has given us about a 30% move since Friday
Wow.
in Chill Brands. That's certainly not the one. I didn't get involved in that one. Let's see if Pinsana has had a move. Pinsana up another 3% though. So Graham Dixon has given us some absolute corkers there. 10% increase in Pinsana and a 30% increase in Chill Brands. And
Wow.
I bet you wish you'd come back on Friday.
I know. Why didn't I come back sooner? So this, could have helped me pay for some big bills here. Chill Brands, has moved without, anything external, because I've just checked the wires and it's still the same story that you mentioned earlier, that vape deal with Relics.
That's Relics, yeah.
Yeah. So maybe it's just algos, or other fund managers coming into the fray. But Chill Brands, this is what Rich mentioned earlier, saying that they're going to increase revenues as they expand Relex's market share in the UK through their dedicated sales team.
Some good news. Andrew McKelvey is out of WH Smith. I am very happy to hear that. Well done, Andrew.
Phew, yeah. But well played, Andrew, on the bounce back on WH Smith when it had that big drop.
Right, shall we have a little look in Europe then? So Rheinmetall up 1%, Stellantis is up 1 as well, Siemens up 1, SocGen. So yeah, a bit of strength in Europe as well.
So back to those defense names, Rich, as well. There are, there are reasons still to, and especially in the big names, there's still reason to be optimistic that their prices will be well supported, because there's going to be backlog and the spend for 2030, as I mentioned earlier. Any of you want to ask questions, Han ETF's Tom Bailey will be with me later on, and it's a momentous occasion because he is going to be, for the first time ever, announcing on our show their new Future of Defense Indo-Pacific ex-China ETF.
Wow.
A lot of I don't want to steal his thunder, but there are a lot of Korean names in that ETF.
Excellent. Right. Touch on some commodities then. Commodities, we are looking up 2% now in silver, high-o silver, and up 20 basis points in oil. So oil settling around that $64 mark, with copper at $4.60 on the high grade metal. Natural gas up 2%. Corn. Somebody was talking about corn earlier on the chat. So corn looking up 2% as well. So well done there. And actually, I wonder if that one's not open yet. I'm not actually not sure what time the soft commodities open.
I think they are. Let's just have a look. This is the minute chart. Around probably later in the morning. Just checking on cocoa as well, because cocoa, as you all know, had a really incredible year in 2024. Lots of trader friends have been asking, especially on Discord as well. Some of you asking whether or not we are seeing this uptick now. This is the 1 minute chart, but let me show you the daily to give you a sense of what I'm talking about. So can you see here, it's had this roller coaster ride, did really well in 2024, and then as if on Christmas, around Christmas time, it's just gone down and down. But we have seen a floor around July, and it has been ticking higher, which has led many in the market to ask whether we are past that digestion period and cocoa might be on the way back up again.
Right, Smarter Web. We're getting a question in from Neil, away from the numbers. What is the story in Smarter Web? Well, it's an interesting one. It is looks very solid because they have announced a new CFO and executive director of the board. So, you know, those of you that question the longevity of the company, well, they've managed to talk Albert Solomon, who has 20 years of financial and leadership experience, most recently the CFO at CMC Markets. Of course, CMC in the FTSE 250 along with IG. And yeah, so look, that's that is a real interesting one, because there's a lot of people questioning these Bitcoin treasury companies and maybe think that it's all a kind of flash in the pan thing. But if you've just taken a CFO that was last at a FTSE 250 company, then, you know, clearly some people believe in the long term of this company. So Smarter Web now trading 125, which is, I think, about a 1.7 times book, something like that. Let's see.
Interestingly, Rich, it's Mario. Is it Mario Monti, the previous CFO, is also staying? Is that right? But in a different role.
I didn't.
I think
get
I read
down to
that
bit, actually.
Mario Visconti, yes, is going to be staying at the company and fulfilling another role, but I don't know what the other role is. Haven't seen what the confirmation is. But that's also, you know, another thing that we like to see when you have the current CFO, you know, staying on to ensure a smooth transition.
Like a head of strategy kind of thing he's doing.
Yeah. They haven't clarified what the other role is, though.
Andrew, currently in Bitcoin Asia. So yeah, he's over at a conference in Asia at the moment. So I'm sure we will be looking forward to hearing what happens when he's back from there.
Right. On that note, it has been an exciting day so far. Bitcoin back below 110, eyeing key support levels at 105. We saw a pretty flattish open for the FTSE, but some of the semiconductor names also a bit lower. But banks seem to be doing well, and defense stocks, especially the big ones, seem to be supported. Do hit the like and subscribe button, and make sure that you don't just watch, you know, get everyone to subscribe. We like-minded people here. It's been great to see Discord blooming and developing as well over the summer. So reach out to Maturin if you'd like to get in on the action.
Wonderful. Right, we've got the Ron Dog coming up next. So Ronnie will be joining me for Fast Markets in about 2 minutes' time. We'll see you then.
Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities, without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Hello, I'm Axel Rudolph, Senior Technical Analyst at IG and Fellow of the Society of Technical Analysts with over 30 years experience in trading the financial markets. I've been following cryptocurrencies from the very beginning, and with IG's new crypto offering, I can finally share my technical analysis expertise on crypto with you. So join me every Wednesday morning for my new show, Charting Crypto, where I'll be answering your technical analysis questions on all things crypto, live on Trade Live with IG.
Let's do this. Hello, Pat Cash. So guys, I've always been known to be the fastest, the fittest, mentally the toughest, but the cash returns, that's something else. Watch and learn. Come on, Pat. Cash returns, come on. Guys, where are you going? You're not going to get better than cash returns.
If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Welcome back, everybody, and welcome to Fast Markets. So before we go in to chatting stocks, Ronnie, let's have a little fantasy league update here, because you've had a better week here. We still got Mark Lamb at the top. Mark Lamb, 55 points. Well done. Julian Musto absolutely surging up the leaderboard there, Julian. Well done. 65 points on the week. You go to 183. Monkey Man, there he is. Monkey Man, check in with us. Where are you? You're doing your yoga in your front room. You have smashed the Fantasy League as well into bronze medal position, with Monkey Man getting 57 points on the week. And Dave, who's just fixed our studio, is in there on 53. James Watson. Dan Gummer's in the top 10. Ronnie comes in at 10th place in the league with 46 points in the week, sir.
Ahead of Luke Moore. The student has become the master, as they say. I came in at 46 points this week. The average was 48, so slightly below average, which is a great metaphor for life in itself. But hopefully we'll have a better fast markets than I've had a week on fancy football.
Good. Right. What have you got for me then, Ronnie? What is jumping out to you this morning?
So, as I was heavily preparing this morning, got up at 4 a.m. to prepare for us, Rich, one thing that
Good
popped
job.
off to me was the stronger BRICS relationship, and particularly the China-India relationship that is being strengthened with the summit that also North Korea and Russia was attending. Ooh. So my question to you, Rich, is there's been a lot of talk in this deepened ties between China and India. They're now said we are partners, not competitors. And in addition to this, we've seen a lot of talk from the BRICS organization itself to replace the dollar as the main currency in international trade. We've already seen some Indian rupees and Russian rubles being used in oil transactions between India and Russia. My question to you is, Rich, how will this affect the US dollar?
Well, it's interesting this week as well because India and Russia having a meeting as well. So he's off to see Putin after meeting with Xi. So big week, and of course those tariffs that have been slapped on India, that did take the one I follow is the iShares MSCI India ETF. Now that
tracks the Nifty 50, does it?
I don't think it's quite as basic as that, but it's it's certainly it's the way that I have my exposure. We've also got it in the Art of Investing fund as well. So yeah, you've got MSCI India trading at the low end of its range. It's been up as high as $10, but at the moment down at 937. So the closer that we see India and China repairing that relationship, I think it's a bit of a case of the enemy of my enemy is my friend.
Very much so. And I feel like it's the US and the Trump administration with their aggressive tariffs and foreign policy that's driven them into the arms of each other.
Yeah, very true.
And also, a fun fact is in the Economist podcast, they mentioned number of today, which is 40, which is the number of times that Trump has said that he's brought peace to Kashmir. Unfortunately, that hasn't helped much in his relationship with India. But Rich, do you think this can spill over to the commodities market as well?
Well, so apologies. This is the important thing, I think, is the meeting with Putin. And if Modi and Putin managed to come up with some kind of arrangement that appeases the US and therefore gets the tariffs lower with India, then that is now an opportunity to invest in India for the long term. That's the question that I'm asking myself, and I must feel with conferences like you see this weekend and the long-term opportunity there, then I think, yes, India is one in my pension, and I may well increase that today.
And a great feature that we have on the platform is if you're looking to invest in Indian companies, but you don't really know them and where to start, if you just search for India, you will get a lot of suggestions up. So, for example, the Aberdeen, Up the Dean's New India Investment Trust, or the Emerging Markets Index, which gives you a bit of a broader exposure. But that's a great place to start if you're looking to trade Indian equities or get Indian exposure, is to just search for India on the platform. So that's something that I would recommend. You can also trade the GBP INR.
So you asked me about the dollar. Look, there will be repercussions. So far, it looks like Trump has won, right? And it looks like in the battle with the EU, for example, right? The EU just completely caved, and you're seeing all the benefits go in with this $1 trillion that Trump's raised from tariffs. However, now he's going to start seeing the inflation come through into his system at a time that he's the one who's championing these rate cuts. So he's going to suffer with the repercussion in his bond market, which that's where I think you get the dollar coming lower. An outside bet is if you start to see the rise of everybody who he's targeted in these tariffs on international trade. And that's when you start to see the increased chance of a alternative currency for the world than the dollar. And then, with trouble in his bond market and with alternatives being presented, that's where you start to get a real drop in the dollar.
Yeah, and very much like it was described in Chinese state media, is that China was sort of leading the organization of the global south, that they're standing united, and much of the theme of the summit was to stand united against the American politics that are being issued right now. So it's interesting to see how they're sort of pushing these people in the arms of each other to build a stronger united front against them. Something that the European Union can learn a bit from. One would leave to desire. But yeah, I do agree with you with the concern of the strength of the US dollar, and especially as the world leader. But Rich, you're a commodities expert. Do you think this will spill over to the commodities markets?
Well, it will certainly have an effect, right? Because of course, commodities driven by the dollar, by currencies. We're seeing strength in silver this morning. We're seeing strength in gold. I think that continues throughout this week. Angeline giving the warning on silver that you sometimes do get a surge higher followed by a little bit of a pullback. So I must admit I've never traded silver, but certainly on the gold train. Then you've got the likes of copper, okay? Copper, we know that the LME price wasn't really affected that much by tariffs, but certainly the high grade has been digesting for the past 4 weeks now, has been digesting that 20% drop as Trump reneged on his original guidelines around the copper tariffs.
Yeah,
So,
sorry, please continue.
yeah, I'm just getting messages from a very excited Graham Dixon. So did you watch Graham's segment on Friday, Ronnie?
I did indeed.
So he called Pinsana rare earth. Pinsana now up 7.5% today after moving 7% since he was on the show on Friday as well.
He's a market mover.
He is by the looks of it. Then Chill Brands is up another 20% today after moving 20% on Friday. I mean, this is remarkable.
Look at this.
So yeah, he just dropped me a text. And Defense Holdings is up 5% as well. So
No,
well done,
some people make the market. Graham Dixon moves the market.
Right, Ronnie, what are you feeling for the rest of this week then? Ange mentioned some numbers that we've got. It's a big week of macroeconomics though.
It is a big week, and we're looking at our economic calendar. There's quite a lot of stuff going on, and just for today, we got China rating dog manufacturing PMI. I have to admit, I've never heard of the rating dog. However, tomorrow
really starts tomorrow with the ISM at 3 p.m.
Yeah, and the eurozone year-on-year inflation. The eurozone has sort of been ahead of the curve in terms of against the UK and the US in terms of curbing inflation and getting rates down to a normalized level. So if they can keep strong there at 2%, that's going to be interesting. In addition to ISM manufacturing PMI, that's something that's obviously going to be very watched, as we've seen the sort of the cost of the tariffs coming on against the producers and the manufacturers. So if we see a hotter than expected figure, that's something that can affect the rate cut and the sort of macroeconomic view in seeing that, are we seeing a stagflation? So I'll be watching those. And then next 7 days, what do we have?
Well, so non-farm payrolls on Friday. I've just got an email from my good friend Aaron Sawyer, and he's pointed out to me that there's a big negative revision coming on Friday in previous payrolls. So not just the 2 months beforehand that were changed on last month's reading, but this goes back from April 24 to March 25. And they're talking about a negative revision of up to 800,000 jobs. So the actual jobs that were created are lower. No wonder he sacked her.
Oh, mate.
So that's an interesting one to watch as well. But is this number on Friday going to be so weak that we actually get talks or increased talk of a 50 basis points rate cut, Ronnie?
Well, I think the market is sort of wanting it, and I don't think the government would be against it, as they're desperate for economic growth. We've seen slight improvement in terms of the economic policy and the growth that's coming, and I think fueling the UK economy is something that would be needed if we implement the sort of 50 rate base cuts. However, I think the UK business sector is in quite strong shape. So I think apparently they're holding sort of records of cash. UK sort of stocks, UK big companies are holding records amounts of cash, and I think if we see a lower rate cut, I think we could see some sort of acquisitions, some more spending and investments into the economy itself at a more reasonable price level in cost of borrow. So I am very, very positive to a 50% rate base cut. I think the UK needs it. However, how it works in terms of inflation, as we're seeing quite a sticky inflation in the UK and remaining persistent, one has to be cautious so we don't end up with a Molotov cocktail of low growth and high inflation.
Good stuff. Right, Ronnie, we're going to pass on to a man also with a great beard. Tom Bailey is in the waiting room, awaiting to join us from Han ETF. So I'm going to relieve you of your duty, Ronnie. You can go back to helping Chris Beecham get his chart of the day ready, his trade of the week even.
We got him right here. I don't know if you can see him. There we go.
Give us a wave, Chris Beecham. Go on.
Chris Beecham. There he is. That's all you get.
Good stuff. Right, Ronnie, thank you very much for joining us. Thank you to all you viewers as well for being all over the chat this morning. And good stuff. We got Tom Bailey coming up after this break. Enjoy your US bank holiday. 4:30 p.m. Put your feet up. No US market tonight. We'll see you after the break.
Hello, I'm Axel Rudolph, Senior Technical Analyst at IG and Fellow of the Society of Technical Analysts with over 30 years experience in trading the financial markets. I've been following cryptocurrencies from the very beginning, and with IG's new crypto offering, I can finally share my technical analysis expertise on crypto with you. So join me every Wednesday morning for my new show, Charting Crypto, where I'll be answering your technical analysis questions on all things crypto, live on Trade Live with IG.
If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Let's do this. Hello, Pat Cash. So guys, I've always been known to be the fastest, the fittest, mentally the toughest, but the cash returns, that's something else. Watch and learn. Come on, Pat. Cash returns, come on. Guys, where are you going? You're not going to get better than cash returns.
Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities, without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Hello, welcome back. And we are joined by Tom Bailey from Hana ETF to talk about a brand new fund, which is the Future Defense Indo-Pac ex-China ETF. It's a very long name, Tom.
Yeah. Well, we want to make sure it conveys all the information. So, Future Defense is kind of a kind of sub-brand that's kind of worked for our other defense ETFs, and then include the fact it's Indo-Pacific, but also make clear to investors that you're not getting exposure to Chinese defense companies, because I think a lot of investors wouldn't be necessarily comfortable with that. Gotcha.
And also, those of you that are new to this space, obviously, if you're new to ETFs, that it tends to be a long name because, a lot of fund of funds and a lot of fund managers do search for these names. So it's also sort of an SEO thing, right? An ETF SEO. Yeah. Right. So talk us through this new fund. I'm very excited because I absolutely am very interested in this space. So we'll be going to DSEI, and this new fund is aimed primarily at the landscape of rising defense budgets across Asia. Is that right?
Yeah, correct. So defense has been really the theme of the year, particularly focused on Europe. This year, obviously, we've seen massive amount of interest in defence from a European perspective, with all the different spending pledges, and obviously the kind of concerns around the US security umbrella, future of NATO, etc. And obviously that's been obviously a fantastic investment theme, and we've got two ETFs that kind of target that, but European focused only. We've got our global one as well, which has run for the last 2 years. But we kind of thought about it, and actually, if you think about the geopolitical landscape today, in reality, it's actually the Indo-Pacific region, so including both the kind of East Asia region and also the Indian Ocean. So you kind of India all the way up to South Korea is actually really the kind of key focus point of geopolitics in the 21st century. You've got the South China Sea dispute. You've got the dispute over the status of Taiwan. You've got ongoing tensions on the Korean Peninsula. You've got India's border disputes with China ongoing. Obviously, kind of seen India and China become a bit more friendly lately, but they do have these long-running border disputes and this rivalry of a rising India versus a rising China, and as well as India's other border disputes, say, with Pakistan. So it's a key geopolitical tension point, but it's not received such interest from investors. If you look at defense budgets in the region, they're still relatively low as a percent of GDP if we're using that benchmark. So if you look at somewhere like Japan, for example, it spends around 1.4% of GDP on defense. If we look at Taiwan, it's just above 2%. If we look at South Korea, it's around 2.5%. If we look at India, it's just over 2%, or maybe close to 2.5%. So these are relatively small defense budgets still compared to measuring against GDP. So, our view is, this is going to be a key geopolitical flashpoint in the 21st century. These countries are starting to realize this and starting to spend more. And particularly, you can see, for example, 20 years ago, China was spending about $80 billion a year on defense. They spend about $300 billion today. So, you've seen this massive surge of Chinese defense spending, but you've not seen the same surge for its potential rivals or adversaries in that region as well. So, we think everyone's focused on Europe, and that's very key, and it's a very important story, but Asia is becoming increasingly important.
Interesting. And with the geopolitics, laser focus, especially in Asia at the moment, with Modi in China, and the fact that Trump has essentially kind of made two of Asia's biggest enemies come round to the table and buddy up. Is this likely to mean that less challenging times, or do you think it's always going to be challenging amongst those two big Asian superpowers?
Yeah, I mean, ultimately, both are rising powers within their own right. Temporarily, given the kind of stance of the Trump administration, you're seeing a bit more cooperation, but you're still going to see this desire among India to spend more, not say see the supremacy in the Indian Ocean towards China, because obviously China's navy has surged in power and capacity in recent decades. And then at the same time, the core of that is ultimately the instability and volatility around the US's historic commitments in the Asia-Pacific region or the Indo-Pacific region. So, the US has never had a particularly strong alliance or friendship with India until recently, but now it's obviously been pushed away again. But more broadly, we can consider, this volatility around what the US considers its role to be in Indo-Pacific is pushing Asian countries, South Korea, Taiwan, Japan, need to kind of reconsider their defense stance. The question around, is the US going to draw down troops on the Korean Peninsula? How committed is the US to defending the sovereignty of Taiwan, etc.? So these are all questions which are key to basically kind of pushing forward these countries to start spending more on defense. And we've seen this itself, kind of the way Europe has had this one. On the one hand, Europe is worried about, complete US disengagement and obviously having to spend more. And at the same time, the kind of pressure from the US to spend more if they want to stay committed. So, obviously Europe, or rather European NATO agreed to this 5%, 3.5/5% target at the Hague NATO summit fairly recently. We're starting to see that same pressure, we think, come to US allies in the Asia region as well. Peter Hegseth, when he was at the Shangri-La Dialogue a few months ago, said, our allies in Asia are in a much riskier part of the world than Europe, but even now Germany is spending 5% of GDP on defense or on direction to do so. But you guys are simply not spending enough. So we think that same pressure is coming, both in terms of the US saying to spend more and also realizing the need to spend more because the US is becoming more unpredictable in terms of its security commitments.
Let's take us through some of the top 10 holdings here. I'm looking at it with great interest because a lot of Korean names there, but not many Indian ones.
Yeah, so this fund only launched fairly recently. So it will have Indian holdings within the next few weeks. So it can just take a bit of a longer time to get the custody in place to own Indian listed stocks.
Why is that? Why does it take so long? Talk us through the process.
It's just a kind of operational process. You're simply opening the accounts and getting approval from the Indian financial authorities to hold those equities for the ETF. So it has a little bit of a lag time, but we expect to be able to add the Indian equities in the next couple of weeks. And so if you look at the index itself, which obviously is the basis of the ETF's allocations, it's around 30% exposure to Indian defense stocks. So within the next few weeks, it should reflect that. And then the Korean weighting will come down to around 43%. So you'll still have very strong weighting towards South Korea, but also a strong weighting towards India. And then also you'll have in there some Japan, Australia, Singapore, and Taiwan exposure as well.
Right, gotcha. Interestingly, Australia is not as high as they expected, given, it's had clashes in the past with China.
Yeah, it's a function of the number of companies essentially. We're looking for those pure play defense companies, and so there's ultimately, I believe, 3 Australian companies which were included based on our methodology. So what we're doing is we're screening for defense sector revenues. So we're looking for companies with a minimum of 20% exposure of their revenue exposure towards defense military sales, and then if they have that 20% minimum, we give them a weighting of 5%. And if they have more than 50%, then we'll give them a minimum weighting of, max weighting of 10%. So, it's simply a function of, Australia is very much an importer of defense technologies. So you won't get such exposure. It's a major buyer, obviously. And when we've seen deals, for example, with, so if we take Australia, Mitsubishi Heavy Industries, which is in the portfolio, obviously major Japanese company, recently signed a big deal with Australia to sell them naval ships. So you are getting that Australia exposure, but you're getting it within that broader Asia Pacific, Indo Pacific defense ecosystem.
What's the outlook, for example, if we see continued partnership between China and India, and perhaps period of stability? Because essentially, Tom, when we spoke about Trump and what that might bring before he won the elections, there was this sense that India and the US were partnering up to kind of sideline China against China. Now it almost seems like India doesn't really know what Trump wants, and so India and China are starting to talk together and start to collaborate again.
Yeah. Sorry, Karen.
Well, did you say that's a fair sort of theory?
Yeah, but at the same time, I kind of view this as it's a potentially a temporary kind of not nowhere near an alliance, but sort of a temporary reapproachment for out of convenience, given the pressure India's coming under from the United States. What I don't think you'd see is India and China becoming now some sort of stalwart allies with each other, and India's own kind of concerns around the growing power and dominance of China in the region receding. Obviously, they simply view this as a mutual interest to kind of fend off some of the pressure from the US itself. But at the same time, India is not going to give up on its desire to become a great power in its own right. And with that comes more defense spending, and potentially these tensions with China, which remain unresolved, but they can be looked over. They can be looked over in the interim while there's this US-India kind of rift going on.
And let's talk us through some of these individual names then. I know some of them, but not all of them. Hanwha Aerospace, that's I believe one of Korea's stalwarts, and they're trying to, of course, become one of the biggest, if not the biggest, arms contractors. This is South Korea, the country in itself. So that one I am familiar with. Kawasaki Heavy Industries as well. But I'm not across the other names. Talk us through some of the other names for us.
Yeah, sure. So if you look at, say, Hyundai Rotem, they're a very interesting company. They're a South Korean company again. And what's interesting about, and it kind of applies to lots of the other Korean names, is they're very much part of Korea boosting its arms exports. So Hyundai Rotem has been one of the key suppliers to Poland for its rearmament drive. And so, we can consider, South Korea has around 2.2% of the global arms market by volume. But the goal stated by the government is to reach 5% by 2027. So very much, obviously, South Korea is a very industrial policy kind of led economy. And so the goal is to reach 5% of this global arms export market. And so a lot of these names you can see are some of these key export names. So increasingly what we're seeing is these sort of companies increase their exports to what you might call kind of mid-tier militaries, who can't necessarily afford US equipment or simply think it's too highly priced. So, for example, Poland is coming to buy their equipment. And at the same time, you'll see that increased exports, we think, within the region. Countries like the Philippines are increasingly importing from South Korea, but also Japan. So this kind of new dynamic, we think, of basically South Korea becoming a more key arms exporter in this world of rising defense spending.
Right. And Mitsubishi Heavy as well. That's another one that I recognize. They make frigates, I believe, and they've recently cut a deal with the Australians and put ThyssenKrupp's, I think it's is it Thyssen? No, not Thyssen. What is it? Yeah, ThyssenKrupp, that's right. Knows out of whack because they were also trying to win that deal. So Mitsubishi Heavy in the frigate space there. Is it a real aim for this fund to sort of try and be heavier in marine type defense systems because of the way Asia and Indo-Pacific is laid out? For example, in Europe, there's a great emphasis now on drones and anti-drones weaponry. So what is the focus of this arm in terms of the type of weaponry?
Yeah, so I wouldn't, in terms of our methodology, we're not necessarily looking at those particular areas. I think more broadly what you get is it reflects the nature of the companies in the region. So we're doing that kind of defense revenue screen in both Europe and in Asia. But it simply reflects the different types of companies within those regions. So obviously, if you do look at this portfolio compared to the European one, you do get a much more of a naval presence and these kind of bigger shipbuilding companies as well.
Mm-hmm. And Ventia Services, I'm not familiar with that one. What does it do?
I'm not familiar with enough to give you a rundown either. Sorry, obviously we run the index and we run that screen, but we're not individually picking the stocks. So I couldn't tell you off the top of my head too much about that company.
Interesting for me to look at as well, because I'm always looking for new names here. And in terms of the fund, the ETF itself, how if someone on our show or one of our trader friends looking at this and thinking, duration wise, I know we're not, this is not trading advice or investment advice, but it's always an important question to ask yourself before any investment or before any trade, what is your duration? In terms of this fund, Tom, what would you say the average duration? I know it's still quite new, but what do you envisage people using this fund for? Would it be like a 1 year, 2 year, or a monthly? How do you see this playing out for people who want exposure to this space?
Yeah, I mean, I definitely, we typically wouldn't launch a product which we think people kind of would only want to hold for 1 or 2 months. The idea is, you take one of these big themes, and we think these are kind of redefining themes for the global economy. And so you provide a kind of instrument like an ETF, which should give you that diversified exposure over the long term. People might want to, they might be buying individual stocks on a short-term basis if they've got a particular view of a company and it being mispriced. This instead is trying to capture that broader exposure. So, the proposition is, we think defense budgets across the Indo-Pacific world are smaller than they will be over the next few years. We think we're going to see sustained growth on that aspect. We think at the same time, the growth of defense spending globally is a sustained theme, given the geopolitical climate we're in, and Asian exporters are key to capturing that. And then at the same time, we think that there'll be increased push towards sourcing military equipment within the Asia region itself, the same way we've seen in Europe. So we think that's a long-term theme. So we would definitely kind of view this as a mid to long-term holding for investors, rather than simply, a kind of short-term trade.
Okay, great. Let's talk about Europe now, if we may. I've been meeting up with quite a few people who are now flying in for the DACI, and also a lot of local, by local I mean UK contractors. Just wondering whether you got some color on this, Tom, because there's been quite a lot of mood music surrounding, obviously, an increase in spending or pledges to spend by governments like the UK. But there's a lot of mood music surrounding the fact that it hasn't reached the boots on the ground just yet. The commitment to spending, in some cases, in reality, has led to less spending. Have you heard any of this mood music in the work that you do?
Yeah, I mean, I think one of the main kind of questions is the capacity constraints for European defence industries. We've seen strong momentum upwards in that regard, but at the same time, we've had these big spending pledges, but now it's a question of, can that actually translate into production and actually fulfilling those orders? You see big backlogs for a lot of the European defence companies already before these different spending pledges. So it's never going to be a smooth process to basically transform European defence industry to back where its capacities were 30, 40 years ago. It's a long-term journey. We're seeing strong momentum. So, for example, if you take shell production in Europe before the war in Ukraine, Europe was able to produce around 300,000 shells a year. Now they should be able to produce by the end of this year 2 million shells a year. That's the 155 artillery shells. So you are seeing strong momentum. Defense industrial, defense factories are growing at 3 times the rate they were pre-war in Ukraine. So you are seeing this strong momentum. But this is not, scaling up a tech company is one thing. Scaling up production of military equipment is a whole different game, and it can be a much longer time frame.
Is the focus also heading towards weaponry that can be assembled on site and very, very quickly, and mobilizing without using humans? By this I mean, is there a bigger emphasis on AI defense type methods? It's a very nascent area still. I think the focus for a lot of Europe is on deploying the latest technologies, but at the same time, also simply rebuilding a traditional defense industry at the same time, in terms of, I mentioned the shell production, right? That's a very old technology, artillery shells, but that was exposed as a key area of weakness by Europe, for Europe, with the outbreak of the Ukraine war, given the intensity of use and the relative small stockpiles that they had. So I think it's both. What you are seeing as well, that production side, is increased moving production. So, for example, I mentioned on those South Korean companies, but also you can see this with some other German companies, for example, Renk. They're increasingly setting up production, say, in Poland itself. Obviously, is a key frontline state or a member of NATO. So you are seeing a kind of move in production to where it may be seen as most useful for strengthening European defence. Just pushing rank up onto the screen there so you can see this. It's really one that has had that digestion period after we saw many of the defense stocks as well ride higher after the beginning of the year, and obviously Trump 2.0 as well. And it has, like many of the other defense names here in Europe, had this digestion phase where it has come off highs seen since June and is now starting to track slightly higher. What do you think is the prospect for? I know you've got NATO. I love the ticker for that, the Han ETF, European Defence Fund. Do you think that now, with ongoing talks, although nothing has come out of it, has to be said, nothing concrete so far, that all things remain equal, or do you think there's more potential for possibly downside, given that we are starting to see talks between Zelensky and Trump, for example? Nothing concrete. So my humble opinion is that all things remain equal until the fat lady sings.
Yeah, no, you've had that kind of sentiment-driven sell-off. Part of that was the prospect of a peace deal, and then also part of that was essentially it became clearer that the US is more committed to European security than we expected. But I think what we need to consider is, if we do get this peace deal, it's not necessarily the world completely changed, right? So on the first aspect, European countries are not now going to reconsider the way they were exposed to be their weakness, their military capacity weakness exposed during the Ukraine war itself. That's not going to be forgotten, and they're going to remain committed to rebuilding European defense capacity. And at the same time, we have to consider how this war might end, if it even will end anytime soon. I mean, we've seen Merz, the Chancellor of Germany, say this war is going to go on for a lot longer than we expect. But a lot of the kind of deals being spoken about all entail essentially Ukraine ceding territory to Russia, and then the potential for the US to recognize that, say, for example, even recognizing Crimea. Now, that would be a complete upending of the post-war order in Europe. It'll be the first time that territorial aggression has been legitimized institutionally. And all what that means then is essentially we're in a much more dangerous world. We're back in the world where neighbors to countries can annex militarily their neighbors' territory and have it recognized by both the global power and also seemingly international institutions potentially. So that's a completely more dangerous game. It's a much more volatile and unpredictable geopolitical world. It's a complete end of both the post-Cold War era, but even the post-World War II era itself. So we think within this, military spending is going to have to remain elevated in order to get Europe's military capacity up to where we need to be for that much more volatile, uncertain world.
Loads of comments coming through hard and fast on the chat. Lots of interest around the ETF, the new ETF we've just been talking about. A person asking, Tom, is it or will it be available to the US investors? That's a question from a person. Andrew McKilvey asking, Tom, why is the Australian defense company EOS not in this ETF, electro-optical systems? And MR Logic saying China's huge navy is expanding at breakneck speed. So that's a good one. It's also listed the program on BBC. So which one do you want to go for first? Is it available for the US?
Typically, US investors can't buy a UCITS ETF, and as far as I'm aware, there's no equivalent in the US. So unfortunately, not unless you're able to buy UCITS ETFs through different residency. But that's a kind of different question. In terms of not including the Australian company EOS, essentially, it would have to, if it doesn't meet the minimum market cap requirements, average daily trading volume requirements, or the revenue screen requirements, then that's essentially what will mean that's not included. I'm not necessarily, I don't know the exact reason why it was excluded on that basis, but generally, if it has more than $500 million market cap, it's got sufficient average daily trading volume, and it's got more than 20% defense revenues, it should be included. Every quarter, we're running a rebalance on the index and then applying it to the ETF. And so what you get at that is, if for example, just to speculate, I don't know if this stock doesn't meet the minimum market cap requirements, but then obviously it has a decent period of performance, it might then start to hit it and be included, and then it'll be added at rebalance. So there's always new companies being added, particularly when you see a kind of a sector like this, which is seeing strong growth. So it could be in there one day, but I'm not necessarily familiar with the company to say what the specifics are.
Thank you so much. And we will definitely get Tom back on to talk about the fund again when we get the Indian inclusions. Thank you so much, Tom. Always a pleasure to have you on, and be good to see you in the new studio once it's all finished. Thank you so much for bearing with us, because you'll be one of the first to see it. We've had something like 100K spent on new kit and new fancy stuff on the studio. So I'll let you know when we can come in as per usual soon. And don't go away, all of you, because we have Chris Beecham coming up next with Technical Analysis.
Hello, I'm Axel Rudolph, Senior Technical Analyst at IG and Fellow of the Society of Technical Analysts with over 30 years experience in trading the financial markets. I've been following cryptocurrencies from the very beginning, and with IG's new crypto offering, I can finally share my technical analysis expertise on crypto with you. So join me every Wednesday morning for my new show, Charting Crypto, where I'll be answering your technical analysis questions on all things crypto, live on Trade Live with IG.
Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities, without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Let's do this. Hello, Pat Cash. So guys, I've always been known to be the fastest, the fittest, mentally the toughest, but the cash returns. That's something else. Watch and learn. Come on, Pat. Cash returns, come on. Hey guys, where are you going? You're not going to get better than cash returns.
Hello and welcome to Trade of the Week for the week beginning Monday, the 1st of September. Yes, September is on us. So this week it's me, Chris Beecham. Axel is on holiday again. I forget where, but he's off for today. He's back tomorrow, but you get me for today. Let's look back before we go on to this week's trade. Axel specifically mentioned this to me on Friday, and you can understand why, because his trade last week was to go long palladium with a target, he said, at 11.90 and a stop at 10.94. And this looks like a great one. It seems to be working out really, really well. This is the kind of chart that really appeals to me actually at the moment, because you can see how you've got a shift this in trend. Really, you've got palladium, really, really strong rally to start with, lovely pullback as well, and then it started to see the signs of a recovery. It did drop through these lows from July, but it has started to recover once again. So that's a positive sign as well on the price basis. But the fact you've got moving averages moving higher, and Axel's not a fan of, doesn't use moving averages, but nonetheless, it's no bad thing to have them moving higher. The price supported as well. A MACD crossover, there's plenty to like, I think, about this. And so far, it appears to be behaving itself. Of course, it's the price that matters. You have had 4 days of gains since this trade of the week was announced last week. So a very, very good start to the final few months of the year, and that helps to bump up the performance overall. So that's palladium. That's last week's trade. Still seems to be working out very, very nicely. On to this week, of course, and it is payrolls week in the US. It might be Labor Day today when the US market's on holiday, but it is, of course, non-farm payrolls on Friday. And that is crucial because we're heading rapidly towards the September's Fed meeting. We're still expecting to see a rate cut, but you have seen this interesting recovery in dollar CAD, the US dollar against the Canadian dollar over the past few months since those lows in June, when I think a lot of the pessimism around the US dollar reached its height. And since then, yes, there's more talk of a rate cut, and obviously you've had this move since Powell's appearance at Jackson Hole. But interesting that the US dollar is beginning to show signs of recovery. So for this week, for the trade for the week beginning Monday, the 1st of September, we're going to go long US dollar, Canadian dollar, so long dollar CAD. With our stop, the most important thing, we are going to put it, you can see how if I zoom in, we have a defense of support with the price action rather was seeing buyers coming in around 137.20 or so. So I think what we should do is put our stop just below that at 137.10, just give it a bit more room to breathe. But you've already got signs of maybe recovery here. So I'll stop down at 137.10 with an initial target perhaps up towards 139.30 and those highs from just before Powell started speaking Jackson Hole back on the 22nd of August, assuming that this recovery in the dollar in the US dollar has further to go. And so if you look at things like positioning, look at speculative investors in US dollar, they're still quite heavily short the dollar. So if you get a bit more strength here in the greenback, that could give it quite a bit of a nudge to the upside. I think a lot of the bearishness around the dollar seems to have run its course. So that's the trade for the week, really Monday, the 1st of September. We're going long US dollar, Canadian dollar with our stop at 137.10. And let's go onwards to this week, what we're seeing in charts for what is an interesting week in markets, of course, because starts on a slightly odd note with the US on holiday. So do take the moves you see, particularly in European markets, with a bit of a pinch of salt. Obviously, US futures are open on the IG platform from this afternoon for a time, but the full trading, the full whack resumes again tomorrow. So there's always the possibility that you get some slightly exaggerated moves today that don't last because the volume just isn't there, particularly in European indices. That's one to watch out for. But it comes at an interesting time because you've come out of August, which actually for the first time, if you look at the S&P 500, it was positive during the month of August. Now, I think back at the beginning of August, the end of July, we were talking about the fact that in a second term for Republican president, you've never had a positive August. So we have had a groundbreaking moment in markets. I know the excitement is almost palpable, but you've had a positive August. There aren't very many instances of this. That's not a massive break of a statistical run, but it certainly is notable that this correction that people keep looking for hasn't yet arrived. And I've had a couple of chats already this morning with people in the office saying, oh, I think we should expect to see some weakness in September. And I've just cautioned them that usually corrections don't arrive when everyone expects them. And it does feel like that after the big run high we've had since April, big recovery in US markets, all those losses recouped, pushed to new record highs, people are kind of saying, oh, well, it must have a correction at some point. Markets don't do what you expect them to do. They don't behave like people expect them to, just because it's been going up so steadily. And yes, it's been a very impressive run with quite low volatility, only short bursts, but they don't do what people expect them to do. Just because it's had a very good run, it doesn't mean by some immutable law that you should have a correction. I refer you back to, say, 2017, if some of you remember that one. That was a very quiet year. The whole year itself was very quiet. Notably, of course, this year has been different because you had obviously the volatility around tariffs in March and April. But since then, it has mirrored what we saw in 2017, which was steady grind higher, really. A couple of days, such as we saw at the end of August, where we had this sharp pullback, and suddenly it seems as if something's about to happen and everyone gets ready, everyone gets nicely bared up for it, and then it doesn't materialize. And that is the possibility still for September. September does have a deserved reputation for being a volatile month. If you look at seasonality for markets, particularly for the S&P and for the US Tech 100 and NASDAQ 100, you often get a pullback in September. It's one of the weaker months on average, but that is not a reason to automatically think we get a pull. You should always be aware of the possibilities. Maybe the Fed doesn't cut rates. Maybe the inflation print for the month is slightly hotter. Anything could always happen. This is the key thing to bear in mind. But I think it's notable that it still feels like people are expecting a pullback. And generally, that's not when they happen. If you look back to December of last year and the volatility we had through sort of into the first 5 months of this year, that was when we got a pullback because there was so much hype around the re-election of Donald Trump, or the second election of Donald Trump, technically, I suppose. And people were so keen to be long US and they weren't expecting a correction, and then we got one. I think now the atmosphere still feels very, very cautious, which is a funny thing to say with US markets and others at record highs or pushing back to them, but it is notable. So if we're looking at the S&P, sorry, I've not really talked about levels yet. This is technically speaking, I do apologize. We did have a record high at the end of on Thursday, a closing high and a new in-session high, so 6,508 for the S&P 500. It is US holiday, so cash markets close this afternoon, this evening, but it's still worth looking at where we are for the S&P 500. And we're just about 50 points off those record highs. So essentially we are still poised to easily push into new high territory. And again, the charts are still there, pointing towards higher highs and higher lows. You had a higher high on Thursday, just to reinforce this view. If we go to the Tech 100, where so many people are concentrated, notably, of course, you had a record high further back in August. We didn't recoup that last week, but of course, you had Nvidia earnings last week. And again, a lot of focus on that and expectation that it would drive volatility. It didn't really. You had a bit of a move down in the stock, but then it recovered slightly weaker on Friday. But it'd be interesting to see whether there's any kind of recovery here. People have been seizing on any kind of tech weakness, as we saw at the end of July, the beginning of August, and indeed as we saw into the Jackson Hole speech, because we saw the Tech 100 come back down to 23,000 before Powell started speaking, and then it recovered. So slight recovery for the futures overnight so far. Obviously a weaker day on Friday, but you can put that down to a long weekend, I think, for those. But still, but yes, for the Nasdaq, we're slightly further away from that record high, but it's still not very far away in terms of time. And with earnings season now out of the way, and again, that's coming with double-digit earnings growth, which is the strongest in about 3 years in terms of earnings growth. That will mean that there's still perhaps expectations that we could see continued recovery in US markets. As I say, everyone's expecting a pullback. It may not work out that way. Let's just quickly look at the Dow as well on the daily chart. And here as well, the same story, very close to record highs. You have had something of a rotation, of course, people moving out of tech and into some of the other more beaten down sectors. So that's why the Dow's done particularly well, I think, in August. But still, the picture for US markets, or the three main US markets, still looking very, very strong. If we look quickly at everyone's favorite, or my least favorite, the Russell 2000, that's doing okay. It's not record highs. It's still a way off where we were last December, but even this index still continuing to push higher. Let's go. We'll start with Germany, where we've got some interesting dip buying going on. As I say, with European markets today, you have to be slightly cautious because, of course, it is Labor Day in the US, so we might get some volatility as we return tomorrow. But futures recovered off the lows on Friday and then into Sunday overnight, and some further gains here. We'll come to the Nikkei in a second, that's particularly interesting, but notable that we're back above 24,000 here in the DAX as well. So maybe some buying coming on after a bit of a late August, well, I say pullback of 400 points or so. But we're still away off the record highs for the DAX, which was the 9th of July. A lot of this was down to the political troubles in France last week, which inevitably infects other European indices, because there's concerns that we could see a repeat of the Eurozone crisis if the French no confidence vote next week seems almost certain. Doesn't go the way that the PM wants it to, so we might get a new government in France. So there's a lot of volatility in European assets last week, but that has subsided to an extent. And you've seen some dip buyers come back in again. So notable that you've seen some recovery at the beginning of the week, and those lows from Friday still holding. Continued move to the upside, maybe 24,400 from mid-August, and then perhaps clears the way for another test of a move back up towards 25,600. We'll just quickly look at the FTSE as well. Again, it's very, very steady uptrend, very, very quiet market. Volatility still remains low. In fact, we'll look at the VIX in a second, because that might be rolling up downside, and some buying coming in as well on the sometimes fabulous FTSE. Of course, a record high as well here from just over a week ago. So this isn't characteristic of a market that's going down. If you've got record highs within a couple of weeks, it's clearly a sign that there are expectations of further gains to come in markets. And that's exactly what we're seeing here. Very little in the way of news this morning for the FTSE 100 either. It does get slightly busier this week. We do have Ashtead Group reporting numbers, but it's not exactly an action-packed week on the corporate front. The focus will be, of course, on US payrolls and those ISM PMIs we get tomorrow and Thursday, the manufacturing one tomorrow, and then services on Thursday. Don't forget, of course, this week the ADP isn't on Wednesday because of the US holiday. It's pushed back a day to Thursday, so bear that one in mind as well. But again, FTSE 100, after a very tough week last week where we saw the index shed about 100 points after its very steady gains in the first half of August, it is starting to recover. So that's one to keep in mind. But the really interesting one I thought overnight, where the volatility was Japan, because we had a 3-week low in the Nikkei overnight, briefly moving below this late July high. But as you can see, this candle here some conviction buying going on. Now, this was put down to the fact that the concerns partly around Nvidia's earnings, that chip demand will slow. Alibaba also had some good numbers. We'll come to the Hang Seng in a second. And that really set people worrying that maybe Nvidia's market share would be chipped away. There's concerns about how much Nvidia can sell to China anyway. So that drove down chip makers in the Nikkei, which pushed the index lower. Note if you looked at the Topix, which is the broader Japanese index, not a very popular market, it has to be said, but that was down by much less. So because of the less influence of chip makers in that. So it wasn't exactly a broad-based sell-off in Japanese markets. So again, if you look at where the Nikkei was a month ago, down at 40,000, we gained nearly 4,000 points for the first 2 weeks of August. So it's not surprising that we've had a bit of a pullback here, but signs of buying emerging once again here. It's been a little bit of false dawn the last couple of weeks, really, for the Nikkei. We saw that the 22nd of August around the Powell speech, and then the fact that the dollar weakened, the yen strengthened, that weighs heavily on the Nikkei with so many exporters. But we're seeing a recovery back about 42,000, so that's quite a positive sign here. And then quickly, bit of an indices heavy start here, but interesting that you've got the Hang Seng very, very strong. Very, very strong. On the 22nd of August, had a nasty drop to 25,000, but the buyers have come in, taken this one and really run with it, pushing us back in the direction of these highs from mid-August. So indices in a very interesting position. Obviously, with the US holiday, it could change tomorrow, but at the moment, it looks like we've got some tentative buying to start the month, and that's one thing to bear in mind. We flick over quickly to currency markets. As we talked about in Trade of the Week, it is payrolls week. Last month, of course, was the one that saw the huge revisions to the downside and all that excitement around firing the head of the Bureau of Labour Statistics and the fact that the Fed is now really signaling that they're expecting to cut in September. If you get a strong payrolls report, maybe that changes the pricing. That could give the dollar a bit of a boost. If you're looking at dollar yen, it's been this real attritional battle around 147. Obviously, you've had some dips below that as ever. This is why I always caution against using too narrow a stop. You should give it some room to breathe. But certainly, whenever we get down to about 146.60, 146.50, the buyers have come back in again. They haven't been able to really drive it higher on a sustained basis because of all the talk about Fed rate cuts. But it's notable that there is this strength coming through, and that continues the recovery from those late May lows when, as I said in Trade of the Week, all the bearishness around the dollar really reached a peak. And the fact that positioning is still very underweight US dollar, in fact, net short in a lot of cases, it does give you room for a bit of a bounce early in the shorter term. And so I don't think we could rule out the fact that even if you don't get a payrolls report that's massively stronger than expected, there's enough fuel there just to give the dollar quite a bit of a leg higher, which is particularly interesting, of course, when you consider things like the pound against the dollar still holding up relatively well despite all that. So it's a slightly interesting juncture, certainly for the pound, because you had the BOE rate cut. Maybe some bearishness about the UK economy has run too far. You might argue you can't be too bearish about the UK economy given the state it's in. But there we go. We are recovering back above 135, which gives us a bit of a hope to move towards that 136 high from August. Let's just finish off FX for the sake of completeness. We should talk about euro dollar as ever, the most important, perhaps currency pair, one of the most popular ones. Let's get that up for you. Here we are. 117. So again, a similar picture here, really not seeing much sign of the dollar strengthening markedly here. So as ever, takes two views to make a market, but certainly is interesting optimism around the euro dollar in the short term, maybe around the European economy, even after all the excitement, as we said, about France, because it's expected that even if the government falls after next week's confidence vote, they will probably be able to cobble together a new one and keep the show on the road for the time being, which does perhaps put a move back towards these highs around 118 back in prospect. So that's an interesting one to watch there for euro dollar. We should talk briefly about commodity markets. Gold, well, there we go. It's had its consolidation over the last few months. If you've been prepared to sort of sit and be patient with gold and buy the dips, it has delivered over time. I mean, you haven't really had obviously a breakout above those April highs, but it's taken its time and it's finally maybe getting there. So 3,500 very much now in prospect. This is coming notably, of course, even as the dollar has strengthened overall over the last few months because of, as I say, some of the bearishness fading. But there's still a concern that maybe with the Fed moving to cut rates in an economy that is still relatively strong, and the sense that maybe the push in the US will now be to run the economy hot, which allows for inflation to move higher, that could give gold a boost. So very interesting to see gold pushing through, of course, and it has to close above this, but pushing through that mid-June high at 34.50, which is where it really ran into a wall then and took us back down again. But you have had these higher lows all the way through May, June, July, and August. And if you're prepared just to buy on those dips and hold with it, then yes, it did quite nicely. So very much one to watch. Can we get above and hold above 3,500? And then finally, oil prices. It looked like we were poised for a decent break to the downside last week. We had a really quite a sharp drop on Tuesday, almost 2% down to $63 a barrel for WTI. But then we bounced back again, and that's been negated. So it is interesting for the time being that you're not having a substantial move to the downside here, even though there's commentary about next year seeing a glut of supply and thus weighing heavily on the crude price. But markets being markets, they don't always obey the headlines. Recovery in crude this morning back above $64 a barrel. The key one to watch will be 65, because that's where last Monday's gains faltered, and you had a lot of selling come in here, and that was previously support back in July, throughout the month of July. Really, every time we got down to about 65, you saw some buying emerge. It's combined, of course, with geopolitics, but nonetheless, the level is there. So that's the one to watch. Can we close above 65? That might mark at least a short-term sea change for crude oil, and maybe something of a change there. But then natural gas, sure, we can do that. One request, galleries, thankfully nudging me, so we can talk about that. Oh, let's talk about natural gas. What was that other one we could look at? Sorry, I just didn't. Pensana, you'll have to spell that for me in a second after I've done natural gas. Natural gas, a bounce. Don't laugh at me, gallery. Let's look at this coming into the 50-day moving average after what has been. In fact, I looked at this for a possible trade of the week short, because there's your downtrend, decent counter trend rally. But is it going to? Admittedly, it's not really confirming the price yet. But you've got some caution developing around the 50-day moving average, and maybe, just maybe, stochastics showing faltering momentum to the upside here. This is short-term stochastics. Maybe that puts us in a resumption of the move back to the downside. So I would be watching that. I wouldn't be I'm not trading it, but if I was watching that for a possible short entry, I'd be probably thinking, oh, this is interesting at this level, because A, you've got resistance possibly at this 50-day moving average, and then it's going to encounter more trouble around 3,200, because you can see there late July was where the selling really developed. It couldn't break back above that, and it also had found support previously at 3,200. So a key level developing there. And what was the other one we were going to look at? Oh, there we are. Rare earths. Wowzers. Well, that's a trend and a half, isn't it? That's a fantastic bounce. Doing really, really well. Is that Andrew, did you say in that one? Gosh, that's a very good trend. You've got to be very happy with how that's worked out, building off the geopolitics of the past year, from 20 to 120 in a short space of time. Buyers coming in furiously in early August. Wow, that's great, isn't it? It's an interesting example there, of course, is how you get an overextension from the moving averages, and eventually the price notices, if you like, in inverted commas, and you get the pullback, but do pull back to the 50-day moving average, and then bounce. So that working out really nicely. So you said I could see this moving higher. Well, it's very, very slightly overextended at the moment. You might argue that the fact it's gone from 80 to 120 in a very short space of time. There again, small cap stocks like this, and I think we can call it small cap, sometimes they do their own thing, really. So it's interesting to watch. There's plenty of momentum there. Well done if you're in it already. I suppose maybe you wouldn't be buying it right up here, but markets have often proved me wrong, and it might just keep going. But very, very strong trend. I like that in terms of an uptrend. It's one probably to keep on the list of, if it pulls back again, keep an eye on it. Maybe one to look to enter in on any weakness in the short term. And then IAG as well. So from rare earths to airlines, seamless transition. Very, very, again, you've got to like the way this has performed since, of course, the April craziness. You had some weakness in mid-June, back to the 100-day moving average, back to nearly 300p a share. another decent surge. The fact we're through those February highs as well is very, very encouraging. Momentum just weakening, I think, as you'd expect after such a strong run. But again, another one you'd probably put on the list of things you might keep an eye on for further weakness, maybe to wait to see if you get a higher low established. In the short term, you've got around 365 was where the buyers clearly defended that one, refused to let it go much lower. So there's your line in the sand for the time being. If we get back there, or maybe even the 50-day moving average, because that's where we found support back in the second half of June. But a very, very strong performance for IAG there. One of the really, really solid performers the last few years. If you've been wise enough to get in, he says, with perfect hindsight, at about £1.50 back in 2024, you have done really, really well out of IAG. If you had the stomach, of course, for the February to April madness of this comeback, absolutely storming performance. So clearly there's a lot of institutional interest in this stock since then, because that's clear recovery in terms of its share price. And I think, unless there's anything else I should be talking about, I think that's all for this week. Oh, I've got one more, which is EWS. Okay, German stock, always a bit niche. Yeah, and this is the last one to round this one off. It's first for me doing a German stock, I think. Yeah, interesting that it's got through, just about sneaked through that March high. So that's a positive sign as well. Again, there's a lot to like here in terms of the chart. Strong uptrend, quite volatile. It certainly makes it fun to trade, but you've got plenty of interest coming through from June as well. Rebuild this position, rebuilding of the uptrend, back above the 50-day moving average, back above the 100. That's a fairly solid sign. Pulling back in the short term from those highs, again, a case of looking at where the prices, where the moving averages are. There's a nice gap there, but it's slowly getting filled. It might be gently descending back towards the 50-day moving average, the blue line here, before maybe it starts to recover. But a very strong uptrend there as well. And the fact it closed briefly, managed to close above those March highs, a positive sign as well on that front. Good, thank you very much. Axel will be back as normal next week, of course. You'll be relieved to hear, but don't forget, of course, it's US holiday, so it's fairly quiet afternoon expected in European markets, I'm afraid, and then back to normal with the US, and then non-farm payrolls on Friday as ever. But thank you for being with me this morning, and have a good day.